Hello, with me today I have Stephen Rosser, Investment Director at Next Energy Capital. Hi Stephen, thanks very much for joining me today.
Pleasure to be here.
First of all, and although I think the name of your fund is a bit of a giveaway, could you explain to viewers what Next Energy Solar Fund does? How does it make money, and also your relationship with the company?
Very happy to. So Next Energy Solar Fund is an investment company. It's listed on the stock exchange and part of the FTSE 250. It owns a portfolio of generating assets, mostly solar photovoltaic, across the UK. We have some assets in Italy. It makes its money by generating power and selling that power into the grid, and also from government-backed subsidies, which will run for a good 11, 12 years from here. Next Energy Capital, which is the business that I worked in, is the manager and investment advisor of Next Energy Solar Fund. So I run the operations of Next Energy Solar Fund day to day, making sure that the portfolio is operating as we would want it to, and devising and executing our investment strategy. What
external and internal events have the biggest impact on the valuation of portfolio assets?
Well, as you can imagine, as a power generator, a clean power generator, power prices do have an impact. For Next Energy Solar Fund, over half of our revenues come from government-backed subsidies, so we're less exposed to that than other types of generation. But power prices do have an impact. Inflation can also have an impact in terms of how costs within the portfolio grow, but the subsidies are inflation linked, and that far outweighs any impact from inflation on costs. So there's a significant benefit from inflation in terms of the way the subsidies will continue to grow for the remainder of their life.
You published results earlier in the summer. Could you pick out a few of the highlights and things perhaps that investors should look out for in the months ahead?
Of course. So the last financial year was categorised principally by three things: a very strong, solid and resilient performance from the operating portfolio, brought that operated in line with its budget, which is really important, and I think we'll remember that year, particularly last summer, as one of the darkest and wettest summers from recent memory. But the diverse nature of the portfolio, it being spread around the country, meant that we were able to bring the operating budget in line, operating performance back in line with budget, which was a great result. We've obviously been very conscious of where the share price is relative to the net asset value of the portfolio. So we've had some strategic activities to support the management of that, recycling some capital in particular through the sales of a couple of assets, one within the year and one just after the year, both at a premium to the net asset value. The third element of the year was bringing online our very first standalone battery storage asset, which is a 50 megawatt 1 hour asset called Camilla up in Scotland. Really pleased to see that come online as part of the evolution of Next Energy Solar Fund. We also brought online additional capacity in Spain and Portugal through some assets that we've co-invested in alongside one of our private funds and some of the largest institutional investors in the world. So really excited to see that progress in terms of the capacity that we have installed.
You make a good point. You mentioned the gloomy summer. Now, for sort of the layman looking at a Next Energy Solar or a solar fund, you think, crumbs, that wasn't a good summer. But I guess the summer before, previously we've had long periods of 40-degree heat. So how does that create volatility within the portfolio?
It does have a bearing, although I think it's important to say it's not necessarily sunshine that drives the performance of solar assets. It's the amount and quality of light, so it's all about irradiance. So very sunny days and darker days, the portfolio is still performing and still generating, and as we saw from last year, still generating very well to come in line with its budget. It requires very careful management to make sure that the assets are available when there is irradiance to be captured. So that's something that we do. We manage very carefully within the investment team that I look after, and within the asset manager, which is in another part of our group. So those are the guys who will coordinate people going to sites to make sure that everything is working as it should, and if something is going wrong, that it gets fixed as quickly as possible.
Okay, Next Energy shares trade on a wide discount to net asset value. I think it's around 20%. Why is that? And given interest rates have come down and are tipped to fall in future, I mean, do you believe the discount is excessive?
I firmly believe the discount is unjustified. We obviously work very carefully to perform the valuation of the fund on a quarterly basis, and we're very confident in the net asset value of the portfolio. Part of the reason for our confidence is the work that we do, but also demonstrated by the fact that we've been able to dispose of assets from within the portfolio at a premium to that net asset value. The most recent being an asset called Whitecross, which was a 36 megawatt CFD-backed solar farm that we had built within the fund and then sold relatively shortly after it becoming operational. Being able to do that, being able to exit that at a 14% premium to our carrying value really demonstrates that we're very prudent in the way that we put that net asset value calculation together. So for the shares to be trading at a discount to that I'm very confident that that's not justified. What we understand is that really what's been driving that is capital outflows from the wider sector, particularly institutional investors needing to fund redemptions, which has taken capital away from the sector and perhaps reduced demand for the stocks. But we believe that really ought to come back, particularly as we start to see interest rates come down and capital flowing back into the sector. There's a huge number of reasons to be really positive about the sector itself, given we own physical assets within Next Energy Solar Fund, 102 of them, and they're all positively generating cash flows that support the dividend that we pay. That will continue. So as I say, we're valued properly. There's no reason for the shares to be trading at a discount at all.
Well, something investors and potential investors will think is a positive is the dividend yield, currently around 10%. So it's one of the highest in the FTSE 350 index. So how have you managed to pay out the dividends that you do, and is that level of payout sustainable? I know a lot of it is out of your control with the share price and the discount. But the actual dividend is sustainable.
Indeed. So the eventual decision as to what dividend is, where we set the target, and the dividend that's paid every year is set by the independent board of directors. But what Next Energy Solar Fund operates is a progressive dividend policy. And we're always trying to get the sort of balance of capital allocation right between distributing where we're able to, so that investors have that sort of stable, predictable return, and making sure that we can reinvest in the health of the portfolio and bring through new assets to drive growth. One of the things we work very hard to do through our in-house energy sales desk is to make sure that we are building as much visibility of future cash flows as we're able to in the current market, by through sort of actively hedging the power that we sell. We have more almost 12 months worth of visibility at a sort of very close to 100% hedged, and then we layer in hedges further down the curve, so 2-3 years ahead wherever there's liquidity, trying to do that and take opportunities where there are opportunities, where we're able to do that at prices that are favourable to the advisor curves, to really support that sort of long-term view of cash flows from the portfolio.
Stephen, we've had a change of government. Is that changing your perspective and outlook at the moment?
Not necessarily changing things, but I think it does help with the sort of longer range outlook. It's been very encouraging to see how the current administration have made some commitments through the manifesto and through the election, and then acted very quickly to mobilise those, which creates a very clear sense of the fact that we as a country are committed to achieving net zero. We're committed to achieving an energy transition, And for Next Energy Solar Fund in particular, that's obviously, that creates opportunities for us to attract and retain new capital, to deploy new capital into the sector to drive growth, to achieve those ambitious targets. It's been interesting to see the launch of GB Energy. It'll be very interesting to follow how that evolves. We don't know very much about that as a vehicle yet, but what is clear is that the government seems to be focused on new and emerging technologies and leaving space for traditional investment into what is now a mature technology like solar to really drive forward the energy transition. So my hope is that working together in conjunction with vehicles like GB Energy and the government more widely, what we can really focus on now is accelerating towards the transition that we know we're all investing in and targeting.
Okay, and finally, why should investors buy Next Energy Solar shares?
There's never been a better time, I think, for people current investors in Next Energy Solar Fund and prospective new investors in Next Energy Solar Fund. There is a huge opportunity within the wider sector from a growth perspective. But as I say, fundamentally, what we have here is a portfolio of assets that's performing really well. It's a physical portfolio generating cash in a resilient and a reliable way to support a sustained dividend. So there's never been a better, more attractive entry point for people to come into a vehicle like Next Energy Solar Fund.
Okay, Stephen Rosser, Investment Director at Next Energy Capital. Thank you very much for joining me today.
Thank you.